Good morning, everyone, and thanks very much, FSDH Bank, for having me here today, this morning. Like, I've come from a company, I work with a company called Tolaram Group. Like, people may not be knowing it by Tolaram, but they would definitely know a brand called Indomie. So we are the manufacturer of this brand called Indomie. And that was the first brand which we introduced back there in 1990s, right? And after that, we have ventured into multiple JVs, like we have entered into JVs with likes of Kellogg's. So all the Kellogg noodles or Kellogg cornflakes, which you eat over here, is something which is manufactured by us in our factory. Then we also entered into our JV with Colgate. So all the toothpaste, the Colgate toothpaste and toothbrush, which you guys use, is manufactured by us over here. We also make Dano milk in our JV with Arla, which is again a Danish company, which is the third largest manufacturer of the milk in the world, right? And like we know that what we are here discussing is the recent changes, and one of the very major change was the exchange rate. So Nigeria, or for that matter, most of the countries in Africa continent, they have been facing this crunch of FX time and again, right? So we as a company, what we have done over time is we have always worked towards doing a backward integration. Like when we started with noodles, like the most important raw material which you need for noodles is flour. So we were importing flour initially, then we backward integrated and we entered into our own milling of wheat. Today, as we speak, we have 4 flour mills across the country. And then after the noodles are made, you need oil, the vegetable oil, which you need to make or to refine it. So we started with our own refinery. So now we make vegetable oil into our own refinery. Once the noodle is made, then you need to wrap it up, the wrappers. So then we entered into the backward integration of flexible packaging as well, which is again there in the free zone, right? After that, once the noodles are made and you have 40 packs, you need to pack it in the carton. So very recently is when we have entered into this model of corrugated packaging. So from this month, we will be making the cartons as well. So this is all the backward integration. And now once the product is made, since we are into FMCG primarily, most important factor for an FMCG is the distribution part. Now we decided that we will be owning our own distribution. So if you see, we have around 2,300 trucks of our own and some 2,200 vans of our own, and we take care of our own distribution as well as the sub distribution across the country. And that primarily has worked as a backbone for the country, for the company wherever it is right now. Then if you talk about some other segments, like we are also into infrastructure. So Legos free zone, which is what it is known as, that belongs to us. So we are the 100% owner of Legos free zone. And most of our factories and some of the other third-party factories are also there in that zone. And recently, early this year, like the biggest port of Western Africa was inaugurated by our ex-Prime Minister. So that Lekki port is also which has been done by us. So it is between Lagos state government, us and Chinese is what we hold the port. So this port is going to be, we personally feel that it's going to bring revolution into this country because this is a deep sea port. It is around 16.5 meter deep against what we have currently, which is around 11.5, 12 meter deep. So even the biggest vessel of the world can come and can berth over there. So this is how, what we have done over the period, starting with one small brand of Indomie, then taking it to a $500 million brand as we speak. It is contributing around $500 million to our top line, and then eventually venturing into multiple sectors. Now, to answer your question, like what we have always focused, to achieve success, and what I learned from my, the CXOs or people who were there and who have run this company and is responsible for what it is right now. It works on 3 A's. Once it is availability. Now, availability, when I say it is availability of raw material. Now, raw material, like there are challenges around the port, there are challenges around the berthing and all. That is when we entered into this port segment, and we always ensured, even during the last 3 years of pandemic, there was not even a single day that where our factory was shut because of the unavailability of raw material. So we always ensured that this raw material is always available. So we are able to make our product, noodles, Indomie, or whatever it is, and can serve the country all the time, right? Second important thing is affordability. You need to make, or you need to continue innovate items like wherein you ensure that your product are made in an affordable manner. So at one place where it is good for your tummy, it is very good for your pocket as well. And the last but not the least is accessibility. Like if you have made a product, but if it is not available in the market where you're going, then it doesn't make sense for an FMCG company. And that is the reason the availability product, and that is where our distribution and sub-distribution, which I spoke about, played a very, very key role, that our product, as we speak, is available in almost every corner of the country. So these are the 3 A's is what we always work on and we thrive on.
Thank you very much, and then congratulations, and thank you for the good work you have done in Nigeria.
Thank you so much.
You've created a lot of job opportunities for people, grow the economy, and also invested in infrastructure. A lot of people in Ibejuleki area will be thanking you because some of them, their plot of land were 300,000 before today, maybe 50 million because of your activity. Thank you very much. So let's go into fuel subsidy. I'm sure a lot of private sector operators, prior to the election, they had been clamoring for the removal because of inefficiencies that were inherent in that. So how is it affecting your business, and what are you reacting to it? And I'm sure, I mean, we were buying fuel for 148 naira per liter, but now over 488 naira, the lowest that we are selling. So what are you doing? Do you think it's good for your business? What opportunities do you see there? What do you think government should be doing as perhaps palliatives? And how internally are you responding to some of the agitations that may be coming out from your distributors, even from your employees?
Sure. So before that, like if you go into the history of, this fuel subsidy, right? In Nigeria, it started in some 1970s. That was started with an intention to curb the impact of the global oil pricing curve at that point of time, oil pricing shock, which we are having. But in late 1970s, like there was, because of the Price Control Act, there was a, rule which was dictated that, okay, it will be illegal to sell certain raw material or certain product, including this petrol, above a certain stipulated time. But the intention, if you see behind this fuel subsidy, was always to help the people who are there at the bottom of the pyramid. Now, a recent study, it has shown that 40% of the people at the bottom of the income distribution, they are using only 3% of the fuel. And that fuel is also more skewed towards kerosene as well as diesel, which was deregularized long back, ages back rather, right? And if I have to put some numbers into perspective, then over the last 9 years, Nigerian government has spent some 11.4 trillion naira in fuel subsidy. And when I am compared with this fuel subsidy with investment into other sectors like education or healthcare, it was barely 4 trillion and 6 trillion taken together in the last 11 years, in the last 9 years rather. And then if I see only the last year, which is 2022, the number, what it says is that the total subsidy which the government has spent on subsidy basically is around $10.5 billion is what we have. So it's no brainer that this fuel subsidy should have been removed long back itself, right? And the benefit or the savings which the government is making because of this subsidy, that should directly or indirectly should go to the people who are in need of that. For example, maybe increasing the minimum wage, like it has not increased in ages now. So that is something which needs to be increased. Maybe like a direct credit into their account, because some of the developed or the developing countries are already doing it, that people who are below poverty line, they are given some subsidy directly into their bank account. Obviously, it requires a lot of hard work on the banking side because still around 50% of the people are underbanked or unbanked in Nigeria. But that is something how it should be done. When I talk about business, yes, definitely it's going to impact most of the business out here in Nigeria, as it is going to increase your cost overall. And the inflation, I'm sure in the next 2 to 3 months, we will see that it is hitting the roof, right? But that's on the short-term side. If I have to see the long-term part of it, because in this condition, what I am saying on the increasing inflation and, the reducing disposable income for the country, the first thing which I am proposing about, how we can, help people who are at the bottom of the pyramid, right? That if that is taken care of, then probably the consumption side for the country as a whole will not be impacted that much. But if I have to, this is on the, the manufacturing side that we have. But if you see in the long run, right, currently Nigeria is facing a huge deficit, revenue deficit. And that is, a major contribution of that revenue deficit is coming from this oil subsidy. So once this oil subsidy is removed, right, probably it is going to reduce your revenue deficit. If you are reducing your revenue deficit, that means lesser amount of borrowing, which you will be doing as a country. Less borrowing is less, a better balance of payment account. And then it will improve the rating for the country as a whole globally. And that is what will help us attract more FDIs and FPIs inflows into the country. This is more on the monetary side, but there is also a moral side which we all should be focusing on. So if you see, eventually all the countries in the world will have to aim towards becoming a carbon and then a zero carbon emission country. And we as a country, like our country has already proposed that we are aiming 2060 to be a net zero carbon country, emission country. And this fuel subsidy removal, in one way, it will also discourage the usage of this fuel, and it will also help or push or rather force government and other companies as well to invest or to start focusing on more renewable, green and clean energy.
Okay, thank you very much. You seem to be very optimistic about the outlook of the Nigerian economy. And of course, there is no way you can put in the amount of money you've put in here without being optimistic. My admonition to you is that please, this same optimism, this message, please preach it abroad and let the FDIs that you talk about, let them begin to come in.
So let me just to answer your question, our company is headquartered in Singapore, right? And we have already invested more than $600 million into the company.
Great.
And then we are employing some 20,000 people over here. So we are really gung-ho about it. We are really gung-ho about this country with the kind of demographic population it has, like some around 43% people with less than 15 years of age. So it has huge potential in the coming years. Where China was earlier, where India is right now, like this is where Nigeria is going to be in the next 15 to 20 years.
Thank you very much. You have done well, but you can do more. Please, we want more. So let's go into the exchange rate. It's not all the times that exchange rate, the valuation of the currency used to be 470, but now at 700. For economics, they will tell you that when you have such an exchange rate at this level, it can help to boost export. But then Nigerians still import a lot of things. So how do you think businesses should respond to the current exchange rate regime to perhaps adopt import substitution? One of the things that I know is that the current exchange rate price will make a lot of imported commodities more expensive in other times, valued at 400 before, but now 700. Now, so how are you then also, so it may likely reduce importation, but how do you respond to that as business owner in terms of import substitution, producing those things? And then what are the challenges you see in that area? And then how do you think it will also help to boost export?
Sure. So as we say that there is fuel subsidy and fuel subsidy has been removed. If you ask few of the analysts, they would say there was a forex subsidy as well all this while. So that subsidy has also been removed right now. So it was needed. It was the need of the hour, which should have been done. But it is definitely because increasing the exchange rate or devaluation of Naira will increase the import cost. And that is going to impact the manufacturing units, manufacturing companies in a big way. And because it's going to increase the cost of their raw material, which they are importing because it's not available out here in Nigeria to the quality or to the quantity they need for their company, right? But again, if I have to see the long run impact, right? So for now, what we have been seeing in Nigeria in the last 2 to 3 years is there has been huge disparity between the official market rate and so-called the parallel market rate. Right. This particular free float of Naira will definitely reduce the disparity between the parallel rate and the official rate. And this will definitely attract the FDIs and FPIs investment because now they will have a seamless access to the market over here at a competitive rate. But having said that, I should also mention that there is always a lag between when the government is implementing an excellent reform like this and when actually the FDIs and FPIs gain the confidence and start infusing the money into the country. During this lag time, this time period, it is very important for the countries or for the entities like CBN, Central Bank, to come regularly, participate into this IND market and ensure that there is enough liquidity over there in the IND market for the imports which the country is doing, obviously to manufacture and to make products for the people out here. Now that particular lag is, if it is not fulfilled, and if this illiquidity scenario continues, then again it will start putting pressure on the parallel market rates, and it will take it north. And the IND rate, which is at around 750 at the moment, it will become more of a paper rate itself, and there will be nothing happening on that. In terms of exports, like you are right, in this particular scenario, there are two major steps which a company can take. One, either you increase the export, or secondly, you reduce your imports, or you have an import substitution in other manner. In export subsidy, in increasing the export, there are some very classic example which I really feel proud when I talk about Nigeria and other countries whenever I'm visiting, right? So one classic example is on the fertilizer front. Right now, if you see agriculture overall for the country, it contributes around 27% to the total GDP of the country. But if you see the usage of fertilizer, which we as a Nigerian are using, it is around 20 kg per hectare is what we are using. And this is against a global average of around 146 kg per hectare by all the other countries. That's the average, right? So now this investment by companies like Dangote and Indorama into this segment of fertilizer will not only ensure that there are more usage of fertilizer by the farmers out here in the country, which in turn will increase the productivity of our agriculture product, and will also help us, increase our GDP one end. And anything additional of that on the fertilizer front can again be exported to have, more forex income coming into the country as a whole. So that's an excellent step, and I really feel proud about saying that companies like Dangote and Indorama has taken that step. Now, if I have to talk about the import substitution part, right, that's again a very, very important, because Nigeria overall has been an import-driven economy only, right? And it will be a very long shot if we have to say that, we will increase our exports overnight and all. That's not possible at all, right? But in terms of import substitution, one of the things which we as a company from Tolaram are doing is like palm fruits or palm oil, right? Nigeria, people will argue that Nigeria is already producing palm oil, right? But if I have to put numbers into perspective, like we produce around 750,000 metric ton of palm oil every year, whereas we are consuming around 1.2 million metric ton, right? So there is a gap. So we'll always be a net importer. So we as a company, and we have a refinery of our own, and wherein we are refining oil and converting into a vegetable oil. Power Oil is our brand, which you must have seen over there in the shop, those markets. Now, in the last 4 to 5 years, we have also invested into farming. So we have taken around 22,000 hectares of land over there in Edo State. We are growing palm fruits over there. So that palm fruits, already the gestation period of around 3.5 years are gone, and we have already started seeing the fruits coming out of it. Now we are in the process of building our oil crushing mill over there in Edo State, so that those fruits can be taken, converted into oil, and the part of that oil, where that oil can be supplied to our refinery. So that will reduce some of the imports which we have been doing as a country, and will definitely reduce the burden for the country as a whole. And then second example, if I have to give, cassava. Again, see, I am a person who thinks more from the left side of my brain, so I always talk about numbers. So cassava, if you see, like Nigeria as a country produce around 62 million metric ton of cassava every year. You're surprised what we are consuming internally is 35 million metric ton only. And the rest is not something which we are exporting. The rest is something which goes waste. And that is because we don't have a proper storage facility, right? So we started growing cassava. And what we are doing with cassava is that we are making flour out of cassava. And that flour is what we are using to replace usage of wheat, which we do in our wheat product, in our noodle production. So at one way, like when we cannot control the import of wheat, because there's a certain quality of wheat which we prefer, which is not grown in Nigeria because it's a coastal in nature. So in this way, what we are trying to do is we are reducing our wheat import, and we are replacing it with something which is produced locally. So that is what we are doing.
Thank you very much. Our time is fast spent, but I will ask the last question just quickly. But before I ask that last question, I want to make a special appeal, and I'm sure I'm speaking for nearly everyone in this class, in this room, and all our participants online. And the special appeal is that you have said the outlook of the economy is strong. The current challenges is just temporary. I want to appeal to you not to increase the price of Indomie. allow the, I don't expect you to expound to me. Just take it forward.
Okay.
Don't respond.
Sir,
allow your profit margin to reduce a little bit. We are paying a lot for a lot of things now. Things have gone up. We have to transport ourselves. So please have mercy on us. Okay. So the last question is, what are the specific things you think the federal government, policies need to implement? I'm aware that the President Buhari hasn't formed his cabinet. We should. I'm sorry. President Tinubu hasn't formed his cabinet, as is taking people to man various ministries. What specific policies do you think they need to implement that will grow your business more and will also be attractive to other people to remain in Nigeria and then for more businesses to come? Just in 1 minute.
Well, again, if you see the history of any developed country or any developing country which is there right now, right, there are few sectors which are very, very important that a government should focus on. Where should they invest? The first and foremost is infrastructure. When I say infrastructure, it is proper roads, proper real estate, power supply, right? This will definitely attract some of the foreign companies, not just invest into the country by investing in the stock market or the bonds or, to get interest out of it, but actually coming and setting up their facility over here, right? Second important thing is investment into healthcare. Because whenever, if you want US or European people to come over here, they would definitely, first thing which they would want is there is a proper healthcare setup over here. So that is an investment which is required not just to take care of the expatriates, but also for the local Nigerians over here so that we have a proper healthy life. Third is like the education. When you have more people coming in, then obviously you would want more Nigerian. Instead of going out and settling down, you need to retain the talent over here itself. And for that, you need to create opportunities for them. So if you have a good education background, then probably these people will always look for local talent whenever they are coming and they are establishing their unit over here, right? That is what we are doing. If you see as a group, like we are employ some around 20,000 people, right? And in 20,000 people, not even there are 500 expatriates. Most of it are local only. So more than 19,000 local employees itself, right? So this is what we are doing. And last but not the least, the problem which we have been facing is on the security front. So that is very, very important that whenever you establish, at least you have some comfort from the government side that, boss, you run, whatever you want to do for the country, you do, we will take care of the security part along with you, obviously. So that is something which is very, very important.
Okay, thank you very much. We actually allow for 1 or 2 questions from the audience. Participants. Any questions? We still have other sessions. So even, okay, sir.
Thank you very much. Just a quick question on your Lekki Free Trade Zone. If you've invested so much in such an infrastructure, why haven't you invested or worked with the government to invest in the evacuation infrastructure for that free trade zone? That's the first question. And then you say that you're backward integrated, and it appears that you're doing it yourself. Why is that more optimal than maybe having relationships with contractors to do the work which you're setting up companies to do yourself?
So I'll answer the second question first, basically, right? I'll give you one very classic example. I mentioned that we have entered into this backward integration of producing the corrugated, the cartons. The reason behind entering into this was when COVID started, right? We reached to a point, there was no supply of paper and there was no cartons which were available. We reached to a point that we had to stop selling our products because there was no cartons which was available, right? To answer your question, it is not, just on the monetary front that, okay, you have to see the job work or establishing your own factory, but it is very important that you have a very solid control on the supply in both in terms of quality as well as on the quantity part. So that's the reason we always believe when we are doing a backward integration, we have a full control on it and we know how to run it, the quality which we want for our end product, which the consumer consumes. Very good. Very important. So control more on the supply side, that whenever we need, we have that in place, and more on the quality. because we never compromise on quality. So that is important for us. On the free zone side, again, like this free zone is there with us for the last 20 years or so when we did it. And the initially thought was that we'll be producing some methane gas or something like over there. But then it did not work around. And then we thought that since we have a, our sea nearby, and that is how the idea generated, that the new factories which we are in, and even not just us, a lot of the external third-party companies are also coming. So that if we have a port next to it, that is when the evacuation, or you can have products coming in, and you can again export from the same port immediately. So that was primarily the reason of having both the free zone and port next to each other. So if I have to give, it is our free zone is around 850 hectares, and within that 850 hectares, the 90 hectares is the port.
Okay,
evacuated into the country by road, but there's just not the road infrastructure or a rail but this an oversight. There is something going to be done about it.
I won't say it was an oversight, because we have seen Apapa, right? There was no road over there, not proper road over there. And that's the reason the traffic or the congestion which you face over there is there. So it was always in the place. But when we came out with the thought that we'll be building the biggest PPP port in Nigeria, of the biggest of the Western Africa, nobody believed us. And that is when it was inaugurated. Or then, if you have been to this free zone recently, you would see there's a lot of construction which is going on, both on the road side as well as otherwise. So there is something which is happening on the road side too.
Okay, thank you very much, everyone, and thank you very much, Mr. Depak. Please, let's put our hands together for him. Thank you. We will still be here till the end of the program, and if there are further questions and clarifications, please join the networking session. Let's talk to him more. Thank you very much. I think we will discuss more during the next session. Thank you very much.
Thank you. Thank you very much.
Now, straight away, we will go into keynote presentation, and I'm delighted this morning to have with us a distinguished scholar, a practitioner, someone who has seen both sides of the divide. He's worked as a banker, as analyst, as economist. He's gone to the government to advise them. And then personally, I have his work at NBS has enriched my work, because as economists, as analysts, you need data in a very timely manner. I'm just going to go through him. He's someone we know. Dr. Yemi Kale is a partner, chief economist, as well as the head of research at KPMG, Nigeria. He has multidisciplinary expertise in data collection and analysis, asset management, project management, and planning, macroeconomic analysis, financial, economic, and investment research, fiscal and macroeconomic policy advisory, and investment banking. Dr. Kale has received several domestic and international awards for performance and excellence, and hold a BSc in economics, first class honors. You know what that means. Master's degree with distinction, and a PhD in economics from the London School of Economics and Political Science. He's also an alumnus of the Harvard Kennedy School of Government. He has held the position of special advisor to the Minister of Finance, and subsequently technical advisor to the Minister of National Planning, from where he was headhunted or seconded to become the Statistical General of the Federation and Chief Economic Officer of the National Bureau of Statistics, NBS, in 2011. And he became the first chief executive officer to be reappointed at the NBS for the second time, when his tenure was renewed by the former President Buhari, in 2016. In that role, Dr. Kale was widely commended, including myself, for repositioning the NBS as a more strategic and credible organization. At the National Bureau of Statistics, he was applauded by both Nigerian and foreign observers for his reforms in data process, which made many believed had restored sanity to the data production process in Nigeria. During his time at the National Bureau of Statistics, significant data upgrade, including GDP rebasing, labor market, and consumer price index, agriculture and business census projects, the state's GDP computation, among others, were initiated and completed. He has led and spearheaded the development of various models and the indices which are currently being used today by policymakers in Nigeria and the international community, including Nigerian macroeconomic model developed for the last two national development plans and annual federal budget. The Human Development Index for Nigeria, the Multidimensional Poverty Index for Nigeria, Labor Productivity Index, Public Sector Perception Index, Business Viability and Sustainability Index, Foreign Trade Index, among others. He's also the chairman and the Nigerian Country of Office of Accountability Lab, and a non-executive director on the boards of several other institutions. He has written widely on fiscal and monetary governance, finance, and economic development in Africa. And I'd like you this morning, please join me as I welcome Dr. Yemi Kale to deliver the keynote presentation.
Good morning, distinguished ladies and first of all, my apology for getting here a few minutes late. It was a little mix-up with the timing. Also, to start by saying that, and this a direct reaction to the previous speaker when he said that the prospects of Nigeria are positive. I'm not disagreeing with that. I just prefer to break it down into the time period. First of all, I have to warn everybody, I tend to be very, very frank. So, so in case I surprise you with the level of frankness, and very, very controversial, I'll try as much. Since I came back, it's actually supposed to be the other way around. In private sector, I should be freer, but I was very controversial even in government. So I think it means that I will even be worse in the private sector. But the point I'm trying to make here is that I think it's important to break it into timelines. So yes, the prospects, I agree, are positive in the longer term, but in the immediate short to medium term, there are going to be huge challenges that the economy has to face, and the prospects are not particularly great in the shorter to medium term. And to be honest, it's those that navigate those challenges in short, medium term that will be around in the longer term to benefit from the good, positive reforms that are going on in the economy. So I guess the objective is to stay afloat, stay alive, navigate those challenges, and in the longer term, when the economy improves, if you're able to survive that to that extent, then it's going to benefit you. If you're able to survive, and I think that's the theme of my presentation. Now I'm going to say a lot of things, some that you already know, some hopefully that I don't know, others that you know, but I'll try and give you hopefully give you a different perspective. And some might even be a repetition of what has already been said, because clearly most of these issues are well known by business. I can't tell a business operator how the policies and the economy is affecting their business better than they can. And also to say that challenging macroeconomic conditions, different policies of government, whatever you want to call them, benefit some sectors, some businesses, and destroy others. So you will never see any policy that is universally accepted by everybody, whether even within the same sector, depending on your standing. So it's very difficult to say this is how the sector is going to be affected, because you will find some businesses within the same sector doing very well and others not doing very well. You will see businesses across sectors doing well. Again, so policies, depending on how your business is structured, what their commodities, their goods are, what their services are, it's going to affect them differently. So again, I understand that this is a room filled with different types of businesses. So so whatever I would say some of you agree with, because that's what's your reality. Others will disagree because they're not really it. So I'll put that in context, so that in the question and answer session, I'm not taking apart. That's not what I can show you my financial. This is not correct. It might be correct. I'm going to give a general overview. Now, our presentation will be in 3 parts. Where has it been controlled? Yes, please go ahead. Next slide, please. As shown on the screen, obviously, I'll start with the global economic environment, because a lot of the challenges we're going to face in Nigeria will be affected by what's going on in the global. It is being affected by what's going on in the global economic environment. I'll just give an example. For example, if as soon as inflation started rising in more advanced economies across the world, they started to increase their interest rates, and we know exactly what happened here. The same thing with the Russia-Ukraine war, supply chain disrupted, all your imports. Now, the problems many of you are having, many of the businesses that are import dependent were having, was not necessarily just FX supply. It was also, can you actually even use the FX to buy the goods that you wanted? Because that entire Russia-Ukraine area was completely disrupted. And that meant the overall supply of the goods that so even if you were close to the former central bank regime and could get the dollars that you needed, you might still not have been able to get the materials that you needed. So there are two sides. Everybody seems to focus on just give us the dollars, just give us the dollars. And to be honest, and this is controversial, I have no evidence to back it. I just felt that why would I go, and my shareholders want maximum returns. Why would I bother getting dollars from the CBN and go and start searching for inputs all over the place? So the margin between what's the word that we like to use? The margin between the CBN rate and the official rate was so wide that I don't think anybody's margins, any business margins could. And I would fire, as a shareholder, I'll fire my chief executive if he gives up 120% return on investment, just substituting and saying he's going to go and look for imports and then bring it in and manufacture and then start trying to navigate consumer demand. It's just a waste of time. Just put the money in the. I think that that's what makes more sense. So that's why I'm starting with the global economy. Then we'll now read down to the Nigerian economy, and then we'll look at the current administration. Next slide, please. Okay. Well, next slide. We're all familiar with. I'm going to go through this very quickly. I think we're all familiar with this. We understand what happened in the global economy since 2019, following the COVID-19 epidemic, the resultant supply chain disruptions, that led to higher energy and commodity price rising, central banks of different countries, unprecedented increase in rates. And just as the global economy was, and of course, many companies, the global economy went into recession. And just as countries were coming out of the COVID-19 issue, the Russian-Ukraine war started and took us back to the same issues, rising supply chain disruptions, rising inflation, and then those interest rates kept rising all across the world. And this particularly mattered because it affected a lot of the things we are doing domestically, and how that is going to, what comes out of that is also going to be important with what's going to happen in Nigeria in the near and longer term. So next slide. But in 2023, the global economy is going to be shaped by the following dynamics. And I'll focus on two: the continuing geopolitical tension between Ukraine and Russia on the one hand, and I get Russia and the more advanced economies on the other hand, particularly the European Union and the US. You can see that Russia is now trying to partner with the the other BRIC countries, and they're all trying to see if they can challenge the US dominance, and all these things matter, the US currency and so on. I don't see that. I don't think that's going to happen, but those are some of the tensions that are going to shape the next, the short to medium term as far as the global economy is concerned. What is going to happen with inflation and what central banks around the world, what they do about this. And of course, there's this increased deglobalization where countries are now looking inwards, and they're basically saying, we are more interested in what happens internally. Next slide. More recently, in the first half of the year, I think the consensus is that the worst is probably over. The global economy has been growing since the beginning of the year, combining the first quarter GDP numbers of various countries in the world, as well as looking at the global PMI results. You can see that they've been going up. And even though the growth is slower than it was in the previous year, and some analysts are even expecting global recession. I don't agree with that personally. And the reason is, what I see rather is the growth rates that have been recorded by most countries in the world are just basically similar growth rates that were exhibiting before the pandemic. So when you see 2-3% growth, it's exactly what they were growing before the pandemic. So there's nothing really different, but people are comparing it from the 5-6% growth rates before the pandemic, and it's coming down to 3%, and people are thinking that is a sign of a slowdown. I don't think that is. I think the global economy is just returning back to normalcy, and that's what it is. I don't really, while a few countries are threatening recession here and there, I don't expect that to be a global phenomenon. You can also guess by looking at the same time the global economy is slowing down, employment generation is growing. Now, if there was really a contraction in the global economy, expect fewer and fewer jobs to be created. So jobs are being created more and more. That is not consistent with a slowdown in the global economy. That's another reason why I think this is just more of a returning back to normal level. So the economy is expanding despite the continuous Russia-Ukraine war. Supply chains are still disruptive, but they are improving significantly. The interest rates being hikes that have been introduced by most countries in the world are continuing, but they seem to be having an impact. Next slide, please. They seem to be having an impact on. Sorry, can you go to the previous slide? They seem to be having an impact, finally having an impact on reducing inflation. So most of these countries across the world are finally seeing a reduction in their inflation rates, even though they are still significantly higher than their recommended levels, but they are still much higher, but they are coming down. And the advantage of that is as they start to come down, you start to see that either the rates the level of the pace of the rates will slow down, or they might actually reverse. I don't expect that to happen this year, but from early next year, I expect those rates to be coming down. Next slide. Global trade has also improved. One key development that I highlight here in the global economy that I think has an impact on Nigeria is the decision of OPEC to cut oil production and minimize and reduce Nigeria's quota to 1.6 million barrels per day. Now, the implication of the official objective of OPEC, or should I say Saudi Arabia, to be honest, because OPEC is really just Saudi Arabia. They say they are trying to keep oil prices constant. I think that is a bit more. I think there's more to it. I think it's just Russia and Saudi Arabia trying to stick it to the US. I think that's also part of it. You are blocking. Russia is basically saying you are preventing us from giving us a lot of challenges. So we're going to create challenges for your economy. We're going to let the price of crude go up, and then a lot of people are going to scream in your country. You're going to have a lot of problems. So we're going to give it back to you the way we can. I think there's a bit of that as well, because there was no basis for the cut. The prices, if we look at look at oil production and oil prices, they were more or less stable in the last few months before we took that decision. The good thing about this is that it has not affected prices significantly. In fact, even the prices has reduced slightly. all prices. But the implication for Nigeria is two. One, if the oil prices don't go up, there will be no benefit really to Nigeria in terms of that. We have missed the period of high oil prices. And even if the president is able to fix the oil production issues, which he seems to want to tackle, he is constrained by the OPEC quota, and it's very close to that. We are producing about 1.2, 1.3, and 1. So yes, we increase our revenue, but not significantly enough because we are constrained by that quota. Now, I think the next meeting is in November, and I guess hopefully we have our ministers by then. We'll have a strong delegation to go and fight this out. In OPEC, there might be it might be important for Nigeria to consider or try to pull out the OPEC if it has to, because the president's policy is talking about 4 million barrels in 4 years. If we have a quota that is restricting us to this. However, before we can even do that, we have to even get to we have not even gotten to the max, the quota figure yet anyway. So I guess that's not even something that we can go and argue, but I think it's something we should take into consideration. Next slide. Okay, now coming back to Nigeria, and I'm going to go through this very, very quickly just to save time. And I think we all understand this. Nigeria's potential, that's why many of us are here involved in business, for economic growth is, next slide please, is well recognized. We've talked about this potential for years. Yes, almost everybody, anytime we want foreign investors to come in, I'm sure this slide comes out in all our reports. And there are facts. I'm not saying they are not. I'm not sure we're still the largest economy in Africa with the effectively the devaluation. I guess that's hitting. I think we're number 3 now, behind South Africa. But I guess it's at the end of the year we'll get those numbers. And it depends on whether you're using PPP or just nominal GDP. But anyway, we're one of the largest economies in Africa. The abundance in resources. We've heard this many times. Natural resources. We all know this. But the next slide, the challenge is that despite these huge potentials, we've never been able to realize that potential. And I want to quickly, and I want to break this down into 4 main issues. One is obviously our over-reliance on oil. Years of political instability since 1960, we've just been starting and stopping and starting and stopping. We've not really had, unlike many of the countries in Asia, had that period of consistent, uninterrupted growth. Someone comes in and disrupts the process, we stop developing plan, all that keeps happening. And even though we've had some form of democracy since 1990, I did say I could be controversial. It's not really, again, it's not really focused on growth. It's always it's been very, very disruptive. Even when the parties are the same, the policies are completely different. So again, you need to have that consistent process of growth, which we have not really had. On first errors, and that's basically, I think that's obvious. That's based on us when I was in government, not anymore, just taking wrong decisions, wrong strategies, horrible policies. And even when industry experts and players are telling government this is the wrong thing to do, we tend not to listen. And even when the result is going negative, and in fact, that's why we even stick up. The more negative it is and the more businesses complain, the more likely we're going to refuse to change it. And that's what we've been doing. And that's on that major issue. And of course, external shocks that affect everybody in the global contagion and so on. But I classify this more as, I believe that all these are just symptoms of a more serious issue. And that's because I believe that the Nigerian economy is dysfunctional. The structure of the economy is dysfunctional. And until that dysfunction is fixed, we're going to continue having all these other things that keep us going from start to stop to start to stop. We continue until those issues are fixed. What do I mean by macro dysfunction? Next slide, please. This is how we describe the Nigerian economy. We have an oil and gas sector contributing, again, we have seen this before, 8%. It's been actually lower now, it's about 6% now. And the non-oil sector has under 45 economic activities, contributing 92% of GDP. So technically, the economy by this is well diversified and should not be affected by shocks, particularly in the oil sector. But in reality, next slide, the economy is better described as a house on 3 pillars. Where again, you have the oil sector contributing 7, 6, 8% of GDP, then you have a portion of the non-oil sector significantly dependent on the oil sector, manufacturing, for example. So that means and this is contributing 55% of the economy. So even though they're not all activities, manufacturing is not an all activity, trade is not an all activity, but they are dependent on oil, the receipts from oil and so on. So whatever happens to the oil sector has a significant impact on the entire operation. So you actually have 62% directly and indirectly dependent on what happens on oil, and to an extent, you're not in control of the oil prices, and more recently, you're not even in control of oil production as well, but your 62% of your entire economy is dependent on oil. Now, and then you have the third portion of the non-oil sector that is not significantly dependent on oil. For example, your telecommunication services, the services part of it, what they call this, entertainment and recreation, and so on. Those sectors are not, but they account for only 38% of the economy. So when you have a problem with oil production, oil prices, only 38% of your economy is actually able to sustain that economy, and everything just gets disrupted. And that's why since 2015, Nigerian economy has been growing in this slow, fragile state because the oil sector has been in contraction for more or less the entire period. Next slide. So that's why you see there's almost a 92% correlation between the trend in the trend in the oil output and oil prices and the GDP growth. They're almost matching each other perfectly, and that's because of the links between the two. And it's also why Nigeria has not been able to leave the recovery state. Now, when you get into a recession, we have had through the last 8 years, you come out of recession, that's the first stage, economic recovery, and then you take off. We have been stuck at the economic recovery stage throughout. And that's because, again, oil sector has remained in contraction through the entire time. So the link between the oil sector and the entire economy is so strong. And that's why I believe it's completely dysfunctional. And that dysfunction has to be fixed. Otherwise, we're going to be dependent on what happens in that sector. Next slide, please. Okay, and that brings us to the challenges that you're all familiar with in the macroeconomy. Slow, fragile GDP, high debt service, high inflation, high interest rates, and so on. Next slide. You're all familiar with the macroeconomic challenges. Now let's take some of them in more detail. If you look at the slides on the top left, you see the growth trajectory, and I'll explain why. Where we have moved from a period of average of 7.7% to 6.0% to about 1% in the last 8 years. Now, I'll explain that later in terms of the strategy that government decide to take and why the new administration, based on what they are saying, may actually reverse that. In Q1, more recently, in the first quarter of 2023, the economy contracted, and why it was again the CBN money, the CBN cash, Naira redesign things. The Naira redesign policy that caused that. In fact, I'm surprised. I expected it to be more significant than that. At least now I understand why some of you used to raise eyebrows when you see NBS statistics. Then I didn't understand it. Contracted again, that had to do directly with cash. All production improved slightly. Also in Q1, I am expecting the economy to end the year about 2.85%. If you look at the lower left, you will see that, and that's the Nigerian PMI trend. You see that, that was the below 50 point was the Naira redesign policy. You can see that growth has slowed down according to the PMI in the second quarter, but it's still positive. So I still expect positive growth, probably between 3 to 3.5%, and that's just based on the PMI trends. Next slide. Yes, now this is what I was trying to explain. Now, this is your, as you all know, this is your GDP, your household consumption, your investment, which is broken down to private investment and government investment. And government investment, of course, infrastructure and the other things. Government expenditure, running government affairs, and of course, net exports. Now, in the previous strategy, post the Buhari administration, the strategy was focused on consumption. Government focused on consumption. It allowed the economy, the private sector to lead. So your growth was being driven by household consumption expenditure. It was being driven by private investment. You will see that compared at the bottom lower left, you see the growth drivers 2007 to 2015, and then from 2016 to date. Household consumption dropped from a share of GDP dropped from 4.7% to 2.8%. Investment also dropped from overall investment dropped from 5 to 2.2%. Private investment was about 4%, contributed 4% to GDP over that period. But in the Buhari administration, it was just 0.26%, 6%. Now now government investment in the previous in the pre-Buhari administration was just contributing 1%, but it jumped to almost double 2%. And government expenditure that was contracting in the previous administration. So what happened is government became the largest share of the economy, but government investment and government expenditure, the smallest share of your GDP. So you sacrifice the smallest share of your GDP. So you sacrifice the bigger shares of your GDP, your household consumption, squeeze consumption expenditure, squeeze private investment by increasing taxes, by finance acts and high inflation and subsidy removal. What the subsidy now? But you squeeze household consumption, you squeezed private investment. Interest rates were very high, cost of production was very high. To get money for government to spend on the economy. So yes, government spent on the economy, but at the expense of the bigger and arguably more important aspects of the economy, and that's what kept your growth at 1%. So I think the strategy was just off. And how did government increase its revenue? One, increase taxes, squeezing from households and squeezing from business, and then borrowed. And then by borrowing, also increasing the interest rates, also squeezing your cost of financing, making it harder to invest. And why would you invest anyway when household demand, consumption is going down? Who are you investing for? You invest. You expand your businesses to meet demand. So if demand is being squeezed, and you can't, whether domestic demand or export, there's really no objective of producing more. Otherwise, your inventories will just go up. So that's basically was the issue. If you look at government share of growth, was contracted 3.12% in the previous regime. During the Buhari's administration, went to 6.9%. It crowded out the private sector completely, and that's basically. It's very important in terms of government strategy to look at this and understand what government is doing. There's nothing wrong with government investing in the economy, providing infrastructure, but it cannot be at the expense of squeezing private investment and squeezing household consumption. Now, if that's where you target, you're going to create a problem for the entire economy. Next slide, please. Okay, I think we all know the story with debt. I'll just tell you a quick story as far as this concerns. I think we've understood what happened here. From 2015, the deficit kept rising, and there was a reason. We entered the recession. We felt we needed to spend. I was still in government at the time. I was in the economic management team. We felt we needed to spend our way out of the economy, but our revenues were very low, and we need to spend. So, what we did was, but the fiscal responsibility axis difference between your revenue and debt can't exceed 3%. So if you want to spend 10 trillion from 3 trillion, you have to increase your revenue. So we just artificially pushed up revenue. And when I say artificially, I was in a meeting room where people just sit down. There's someone with a computer. Okay, what's the deficit? We want to spend 20 trillion. Okay, we need 17 trillion to stay within that 3%. Okay, where are the revenue generating? CBN, what's your operating surplus? We're giving you one. No, make it 2.5. Because I'm actually serious. It was just arbitrarily done like that. And then when they enter to what is left, 14. Okay, what else? So you're just jacking up revenue artificially and giving targets that were, of course, not going to be met. And then you get your revenue expenditure to that level, and then government says, and then implement the budget, and then the finance ministry says, okay, goes to CBN and says, we're expecting 8 trillion in revenue, even though that 8 trillion was largely fictitious. Pending when the money comes, just loan us this loan us the money, and that's where you got your ways and means. So CBN says, by 7 trillion, we'll get it, don't worry. Loan us the money. So CBN loans them the money in line with the fictitious revenue that was expected. It obviously did not come, and that's where ways and then the next year we did exactly next slide. We did exactly the same thing, despite the fact that we did not meet. Next slide, please. Despite, you can check this, despite the fact that we never met the revenue target, we increased it even further. Now you can imagine if your businesses are doing that. You have a target of income of 10 billion, and then you get 6 billion. The next year you make your target 15 billion based on nothing, despite the fact that the economy it was just a way to increase expenditure. In fact, it was a way to bypass the law for expenditure. It wasn't because there was any belief that those revenues were going to come. So we kept on doing that over and over again. And that's why we got where we are. I think we don't understand that. Next slide. Since 2018, inflation has continued to shoot up significantly. Most of it has to do with, structural issues as well as money supply. When you're injecting 23 trillion into the economy, it's going to affect the economy. But the main cause of inflation in Nigeria was less demand pull and more cost push. It was mostly cost of production, structural distribution issues. But then the monetary authority decided to target demand, even though the problem was supply. And because of that, they started increasing the NPR rate, increasing your cost of financing. And you can see that it had no impact whatsoever on pulling down inflation. If you check the trend on the lower right, I don't know if it's clear, you can see that there was almost no impact of the increase in NPR rates for over 2 years on inflation. Inflation continued increasing, and that's because they were targeting the wrong thing. Next slide. Well, okay, I just explained this. That's why Nigeria, you can see Nigeria is one of the only countries that kept on increasing its NPR, having no impact on inflation. Again, I think we just follow what everybody was doing. We should have done a study to first understand the causes of inflation in Nigeria. Otherwise, I remember speaking to someone high up in CBN, and I said, this is not the cause of inflation. What are you doing? And the response was, he didn't even say the policies are right. He said, or she said, so I don't, look, what do you expect us to do? Inflation is right. Do you expect us to not do anything? So you are agreeing that this policy might not be correct, but you are saying, well, we have to. I said, yes, I expect you not to do anything, because sometimes doing something might make the problem a lot worse. And not doing something actually is a policy choice. So don't do anything if you know what you are doing is not going to fix the problem, it create it. So this is the kind of way we sometimes think in government. We have to do something where the monetary authority, the inflation is good. If you just fold that, yes, fold your hand, because there's nothing that is not in your control. If fiscal policies train money into if the problem is not cash, then what are you trying to pull cash? Which cash consumer demand is already constrained, and you're trying to pull out more cash from constrained consumer demand. You're hitting the business, you're hitting the economy. It makes no sense. But this is the kind of decision doing. But like you see, Nigeria was the only country whose, for now, inflation has not been affected by the increase in monetary policy rate. Next slide. This is just beginning to explain that you can see that most of the causes for the increase in inflation has been food prices and related transportation prices. And I'm mentioning this in line with the subsidy conversation we're going to get to. Most of inflation is driven by transportation, fuel prices, and food prices, and they're all interrelated. So if we are trying to pull down food prices, that's what we should look in. Sorry, pull down overall inflation. That's what we should be trying to look at. Subsidy was removed, and we all know the prices went up almost by 200%. It is going to have an impact on inflation. I'm expecting maybe about 25-26% at the next inflation. But I think by next year, when these effects kick in, it might start to slow down, but it's going to still remain high double digits, at least at the end of next year. Would the CBN push up? The CBN is more likely in the short, medium term to increase the NPR rate, or at least keep it constant, as opposed to taking it down, because the inflation rate is way too, and that's the only tool they have at their disposal. And with all the policies being introduced that are likely to push up the inflation, I don't expect that to come down. So interest rates are likely going to go up. Also, to attract foreign capital, they are concerned about the negative real interest rates as well. So it's going to be interesting to see so they need to bring down inflation. So it will be interesting to see what they decide. But I don't expect those rates to come down in the medium to short to medium term. Next slide. Exchange rate movements, it has been discussed already. Of course, you have achieved convergence following the decision to allow the market to determine, to an extent determine, but that was just initial steps. If you look at the top, or the market turnover chart, you see turnover is not really significantly changed, despite the and that's because of supply. So it's one thing to allow the market determine the rate. It's not significantly going to affect inflation because businesses were mostly already factoring that into their operation. That they're buying the FX now at more or less the same price they always were. It's just that now it's more official, but it's about the same thing. So it's really not going to significantly affect inflation. But in terms of turnover, the turnover in the market has not significantly improved, and that means for now the reason why the expected inflow has not come. Inflow from FX comes from 5 sources. One is crude oil production, if you can fix that challenge, home remittances, foreign portfolio investors and foreign direct investment, and I clicked crude already, and government-owned enterprise, and then export-oriented companies. Now, in the past, export-oriented companies, home remittances were not coming in because of that huge gap. The idea is that because there's convergence, they have the incentive to bring it in, but they're not doing that yet. And I'm assuming that it's because of the volatility, the huge volatility in the market currently. People are playing the wait and see approach to see where it's going to end before they bring it in. And I don't think that volatility is going to sort itself out for the next few months until there's really a huge supply, and that's going to be a gradual process. So I don't expect, and as far as FDI is concerned, FDI requires a more advanced forwards market to be able to come in. But when the rate is so volatile, it's difficult for that market to develop. Why would if I am expecting the rate to come down, settle at 680, why would I give you a fixed rate? Agree with you that at 750, I'm not going to do that because I'm also expecting it to go down to 680. So again, FDI will stay out. Foreign portfolio investors are still arguing about negative real interest rates. I made an argument, non-technical argument. I don't see why they care about the inflation rate in Nigeria, because they're not spending their money in Nigeria. Inflation rate in your country is 4-5%, and you are complaining about the inflation rate in Nigeria to be 21. You are saying that you need to be positive. You need positive real interest rate in Nigeria before you bring your money in. I don't agree with that, but I understand the technical reasons why you want to really, but I don't think it applies in this case. So they are still hoping that the rates will be shoot up, it will increase significantly. I don't think that's going to happen because that contradicts one of the president's objectives to pull down interest rates. So again, you wonder whether this money is actually able to, in terms of supply, going to come in. I think everybody, the rest of us that have FX in our accounts, are also just playing they are the traders who are playing the market, and those that are just using it to hedge against, it's more of an asset. They're not going to sell their dollars just because rates go to 800. That's not the reason they put the money in their accounts. So even if the rates go to 800, they're not going to make it available to the market because that's not what they are using it for. But of course, the traders are going to be playing the market. So substantial supply. You can see the supply. The turnover is not even close to the levels at 2021 when we thought the FX market was completely messed up. It hasn't happened yet. Maybe it's a matter of time. We check this next few quarters. Next slide, please. And one more thing. You can see the reserves have even gone down, which has gone down a little bit, about 3 billion in June. So in the 1 month that this policy has been introduced, the reserves actually gone down. Not particularly surprising, considering that they are trying to clear the backlog and all the other things. I still have to expecting the supply to come in. Next slide, please. So in all this mess, we have a new administration. Next slide. In all these various challenges of lack of jobs, low growth, high debt, limited revenue, insecurity, and the like, the new administration comes in. Next slide. and he's based on his party manifesto. Again, I have to warn that most of the time party manifestos and what elected officials don't always match. Although so far he seems to be matching his words with his action, but again, they don't always. So it's focused on economic growth, and we go through this oil and gas, human capital, infrastructure, security. Most of the things that we have all said. By the way, when it comes to policies and plans, that's not the issue with Nigeria. We all know. Go and check all the last governments in 1999. They said exactly the same thing. They focused on exactly the same thing. Go and look at all development plans, exactly the same thing. I don't think anybody has come up with any unique thing to do. It's more or less the same. So it's always the implementation. And I always say that when people get excited about a particular leader, I always say the people that are going to implement that leader's vision is the public service. If the public service is weak, you're wasting your time because they don't have the capacity or the willingness. And there are two different. Willingness is you are trying to disrupt their operations. That's where willingness is. And capacity is, even if they are not affected, are they able to do this? So you can come out with the most brilliant minds and the best ideas if it's implemented badly. And that's exactly what has happened all the time. The implementation is always the problem, not the policy. So I try not to focus on, in fact, the two key decisions, reforms that have been made, which I agree should have been done, subsidy and FX, hasn't been implemented properly so far. So again, that's just showing you an example of some of the challenges we have in the play. The right decision, agreed, but there are certain other steps that have to be taken to support those structures, supporting structures that have not been done. We did it, everybody was praising, clapping, and we didn't follow it up with the necessary steps to keep it in place. And if we don't do that, after it's going to reverse the whole thing. So it's a bold, ambitious, correct decision, but it has potential landmines. You're either going to get it right, it's very, very risky. And if you don't get it right, you're going to mess things up even worse. And that's why the supporting structures are very, very important to entrench those reforms. Next slide, please. I think we can go through the policy trust. Please can go through this as well. I think we understand it. I think I want to summarize the president's approach to unlike the previous administration that was more statist, socialist in nature. It didn't believe in private sector. In fact, it saw private sector growth as anti-business. It wasn't hidden. It was clearly stated. If you had too much money, you are a thief. Why do you need more? I'm actually even serious. Why do you need more money for what? Aren't you surviving? Live within your means. Why do you want more? That was the way. Give everything to the poor. That was and I'm not saying that strategy is anything wrong with it. There are many countries that have actually, a few countries, not many, that have actually adopted that approach and succeeded. Most haven't. So I'm not talking about this. I don't believe I'm an economist, so I don't believe in that strategy. But that was there clearly there, and we see what happened in the economy. That was clearly there. Okay. Now this current administration is clearly more private sector driven. If you listen to the things he has said, the manifesto is more private sector development. We want private sector to lead, to drive. We want to reduce taxes. We want to harmonize taxes, backward integration, public-private partners. Those are the things that we're hearing from the new administration. So it's a different, and that's why the markets actually reacted to, I think whoever won the election, the markets would have reacted. Most people try to say it was because of the particular president. I don't agree it was him. I think because they all said the same thing. All three of them were private sector led. The market responded to elections, ended peacefully. All three candidates were private sector led. They were good. That's why some of them are saying he stole my idea, he did steal my idea. Because they were all saying the same thing. It's a case of I said it before you. But they're all saying the same thing. And that's why subsidy, you could see people could not, the others, ordinarily, you will see the opposition come and use that to fight. No, they couldn't because, well, they will say you said the same thing when you were campaigning. So that's what the market reacted to, the private sector led leadership. And that's what we are going at. So I think all the policies you are going to see, including the ones you have seen, is going to be geared towards, over the longer term, trying to get private sector to lead the economy. I think that if done successfully and implemented properly, we might actually get it right for a change. Fingers crossed. Next slide. Next slide, please. Before I end, I just want to focus on some of the, just to get an indication of his priorities. The manifesto is a lot of things, but I try to look at some of the key things that were said in his inaugural speech that I think would define his immediate priorities And you can see some of them has already, as if he's ticking the box in regard to these things. One of them was removal of subsidies, the exchange rate, lower interest rates. He wants average, he's targeting average GDP growth rate in his first 4 years of 6%. I don't really think that's possible. Tackling multiple taxation. And he also mentioned commodity bonds. I just take them one by one. Next slide. I mean, we understand the impact of removal of subsidies. I don't believe that he intended to move it that quickly. I think that was just a slip. And I understand. I mean, you have been trying the project for a very long time. You finally gotten it. I think he was just excited, and because it was not in his speech, and he just, you know, it is different when you are when you are campaigning. There's a way you talk when you're campaigning. You're trying to whip up claps and sentiments, and he forgot. And you're now the president because he has said this many times. The market didn't care, but this time he said it as president. That's different. And you could see immediately he said it. They were initially trying to run around but they realized it had gone. So everybody just okay, it was deliberate. No, it wasn't deliberate. The market still had about how many months? 1 month, of July so he could have taken his time to put all the supportive structures in place before. But again, so I think that was the issue, and it has led to increased inflation. It's going to lead to increased inflation. Most people have said they don't expect the inflation to increase to the inflation because it is diesel trucks that are being, which is true, but over 90% of businesses in Nigeria are micro, small, medium, they use fuel generators. So it's not, I have to be very careful who is affected. So you might bring your food from the rural areas into town, but within the town, you are moving around in your PMS, and that's going to push up inflation. And even if you tell them to switch to gas, there's also this initial cost of switching to gas and getting all that done, and whether they can even afford to switch to gas and switch. But majority, 90% that provides about 50% of more than that, about 80% of employment is micro, small, medium scale enterprises. They are definitely going to be affected by the price of PMS. And in addition to just your staff moving up and down, I can bet half of the people in this businesses in this room, their staff have looking for ways to ask for increase in salary, including myself. I've written my own. Yes, because they just can't come to work. It's just as simple as that. And when you increase their salaries, you are going to see, depending on what you produce, you are going to try and pass those costs on to consumers. So those of you that are producing goods that are priced inelastic, you're fine. They have no choice. When we did a study with MBS, when households are faced with this kind of shock, they test three things. The first thing, they ask for support from family and friends. That can't work this time because all of us have the same. The second, they do the rationalized expenditure. So they start trying to look for cheap substitutes, cut out expenditure. So anything that is discretionary if your goods are discretionary and you're not producing them at the minimum cost possible, you're going to lose your business. You're going to lose demand. That's exactly what's going to happen. Palliatives are not meant to fix the problem. By the way, they are meant to keep everybody. It's not even meant to cushion anything. It is more a way to keep people from resisting the reforms. How does giving 85,000 naira to poor households a one-off, or if it's not going to change anything? It's just to keep everybody quiet. The things that are going to change things are more longer-term investments, infrastructure, and so on. But nobody's talking about that for now. What we're trying to do is just shut everybody down and give them something, make them, okay, we are taking your subsidy from you, even though you are not really benefiting from it. Oh, by the way, one more thing. The people they are even targeting, the rural areas, is right. The rural poor are not the ones using subsidy. We all use a lot more fuel than they do. We go from here. From here, I'll go to the office. I might stop to go for lunch. On the way back from I stop in the supermarket. The poor go maybe once or twice a week to the market and come, but they're not consuming as much food anywhere close to. That's the rural poor. The urban poor, on the other hand, are going to be significantly affected by this. They are the ones that, and they are the ones that are not in the social registry and the other things that government wants to give. Increasing salaries, that's of the salaried workers, not the majority of the informal sector workers are not going to be affected. So there's nothing cushioning there. And even if you increase salaries and give 800 million, you might end up just worsening the problem because you can stoke further inflation. So you're adding more cash, you're increasing salaries by whatever percent. By the way, minimum wage has to go up, not because of subsidy, but because it just has been going up for a while. But if you are trying to push up salaries to cushion by injecting cash into the economy, you are just pushing up inflation. And then the challenge, you are trying to counter okay, less cash-based palliatives or interventions, like tax breaks, reduce taxes for businesses, reduce taxes for now that doesn't add cash into but it retains your purchasing power because now I have more. I've not increased money supply per se. I'm not giving people cash to just toss in the market. So reduce taxes for individuals so they can still continue buying the same level of goods they were. So you are buying 10 before, because of inflation, can only buy 5. Reduce my tax, they have more money, I can buy 10 with the same amount of salary that I was getting before. That's basically the idea. It's better. And then things like electronic, why can't we use electronic transportation system, e-voucher, things like that, where the urban poor can, it's very easy. We all have mobile phones. There's a code that's given you register, you give you a code, you give the code when you're entering the public transport. At the end of the month, it's very easy with technology. The operator can go and collect his money from government and things like that without putting cash into the system. Of course, the obvious investment in health, education, mass transit, all the other ones we always talk about. I think that's the focus of palliatives if it's introduced. And again, you are trying to maintain businesses on two sides. Businesses have two problems. One, on the left side of the equation, the demand for their products are going down. At the same time, the cost of businesses are going up. So you are squeezing margins. You have to understand the palliatives. You are trying to fix it on both sides. Next slide. I have to move really quickly now. I think I've spoken about the exchange rate. There are still some additional steps that need to be taken that have not been taken to make it more sustainable. I don't think it's sustainable at this point. There are still 41 items that are banned. The forwards market is not fully developed. We are still not attracting that inflow yet, and we're hoping that will come in. Next slide. I don't think this is possible in the short term, although I don't even think it's possible in the 4 years of the administration, maybe in the final year. So I think this is going to take a while. That's why you can say I didn't even say anything much about it. I don't know how you're going to get to single-digit inflation from where it is currently. It's not by fiat. You can't just announce 8% inflation is the interest rate. It's not going to happen, especially with inflation. With all the other things you are doing, that's pushing up inflation that has to be controlled, not in the medium term. So I'm sorry, your cost of finance is not good. It's not expected to improve significantly in the short term. You have to work that into your models. Next slide. I don't think this is possible. It's just not because not even in the 4 years. You already lost the first year, the second year. You are doing the reforms which are going to be painful, that are going to squeeze your growth, your consumption demand, going to increase business costs. It's not going to help in terms of GDP growth. So I don't expect a 6% average growth in 4 years, maybe about 4% at best, maybe 4.5%, because consumer demand is being constrained significantly. But all the policies that have been introduced have the impact on squeezing purchasing power so far. Whether it's finance bill, whether it is the unification, or whether it's subsidy, all of them is squeezing consumer demand without next slide, please. Without allowing purchasing power. This should be easier to tackle, the multiple taxation. Actually quite easy, but also requires seamless working relationship between the states and the federal government, probably to the neck, but it should be easier to do. But again, it requires the president, and he's very good at that, creating that consensus between, he's a deals person, which is also very positive. So he knows how to negotiate and work with different stakeholders. So I think this should be possible. Next slide. I don't agree with this at all, the commodity board, because that basically just, if this is, I was surprised this was part of the initiatives of government once, because this basically means the federal government is going to buy all the agricultural output and then supply to the market. We know the government is not efficient in this at all. That's also a cost going to have on that problem. Government has no business, should not be involved in this. I would have preferred they focus more on providing or creating the policy to provide, like you mentioned, storage facilities. Because half is not the problem we have is not agricultural output not being enough, is that half of it is lost. So while we expanding agricultural output, we should first focus on safeguarding the one that we currently produce with storage facilities, as opposed to saying that we want to guarantee prices for the farmer, which is okay, but government now distributing that output to the public is going to create a mess. So I don't really agree with this, and I don't see how it's going to be implemented. Next slide. Okay, so I think I've gone way above my. So in the short to the medium term, I do not expect your businesses to have a great time. Like I mentioned, consumption demand is good. Inflation is going to shoot up significantly. Consumer demand is going to be squeezed. Purchasing power is being squeezed, and your cost of production is going to go up as well, depending on the sector that you are. If you're in the financial sector, it's actually going to be very positive for you. You have extra income from higher interest rates. You have extra income from FX trading and so on. So depending on the sector you're in, and depending on the model of your business, if your business is very import oriented in nature, you're going to in the short to medium term, you're going to have challenges with FX supply and FX rates. So I don't expect short, medium term. I think for the economy is going to be very difficult. Like I mentioned at the beginning, I think it's more about trying to stay afloat and trying to keep the strategy is more to keep your businesses function, minimize cost as much as possible, and try to retain whatever demand you have, because you have a lot of competition, particularly also from now that we have relaxed import rules and so on, apart from imports as well, it might be cheaper because now you have high prices domestically. It's creating that issue where it's making imports, it might make imports cheaper and it can come in easier. So again, depending on which sector you operate and what businesses you provide, I expect depending on the design, the structure of the palliatives, either way, I don't think it's going to be significant in terms of improving the economy. It might just minimize things slightly. I think that government needs money, and they have started well by removing subsidy. That's more expenditure management, but they need to collect more money. So I think you're going to have situations where taxes have to go up, or debt has to increase, or both. There's just no other way for the government to generate any more income. So I expect they're going to start increasing, fully implementing the Finance Act, possibilities of widening the tax net, or even increasing taxes of your current business, which also pushes up prices. Also, possibility that they're going to increase debt, which puts question marks on the cost of financing. So I think I've covered everything. I think regardless of what your business is, you're going to have problems with consumer demand as well as cost, and is to find ways to minimize cost as well as to retain your consumers, depending on whichever sector and businesses that you operate. Thank you once again for listening to me.
Thank you very much, Dr. Khalid. Please come to the horse seat. We have questions prepared for you. We brought you in here because we know you are prepared. No, that side, so that I don't want to take bullets here. The bullet is going to that side. There is something that he said which I was not expecting him to say, because my MD is here and I have two EDs here. He said, what is happening affects all of us together. I was not doctor. I was not expecting you to say that, because the implication is that when I go to my MD tomorrow to say, MD, hey, Joy, give me some 10,000 naira to supplement. He said, Ayo, Dr. Kale, authority. I said it affects all of us together. So it doesn't affect all of us together. We have wall chests, shock absorber. Thank you very much for, please let's put our hands together for him again. Okay, so I have few, and then we will then just few comments and two few questions. Now you talked about the challenges in the immediate term. And thank you. I like the what the economists call the expenditure approach to GDP that you brought up, which you talked about how the drivers of the economy, where it came from, government expenditure, as against why it should have been driven by consumption, household consumption. So now, from what you have said, we saw consumption, the contribution dropping substantially. Now, if firms, businesses are trying to cope with the rising cost of everything in the market at the moment, they are grappling with input costs, FX, operating expenses, and all of those things. And then you also talked about the fact that interest rate is expected to go up because monetary authorities will want to say inflation to tame it. Now, I am thinking, looking at the development in the stock market in the last 1.5 months, responding to the private sector, expected private sector led economic growth. Do you see a situation whereby there will be a rise in IPOs, initial public offering to allow governments, companies go to the market to go and raise equity as against increasing so much on their debts as a way, two things. Number one, to deleverage their balance sheets, and number two, to ensure that because the consumers, like you said, depending on how elastic the product that you, let me say it in layman language, how you are able to shift the cost increase in your production to the final consumer. But the consumer purchasing power is battered at the moment. So they may want to say, where do we reduce costs? So do you see a rise in IPOs on public offering? Access Bank price went from 9 naira to about 18 naira. And therefore, if they want to raise, say, for instance, 1 billion naira, perhaps the number of shares they will now need to issue will be lower than about 2-3 months ago. So do you think companies and even private companies who are not listed at the moment, do you say that we want to say, let's go to the market because of the improved valuation now to go and raise equity capital as against increasing our debt as a way to reduce, to minimize cost?
I'm sorry, I was taken aback by the Access Bank 9 to 18.
I just use that one as an example.
I'll go and check because what you were talking, I didn't even hear what you said after you said that, because all I was thinking about was I was forced to sell my Access Bank shares by KPMG as part of their policies. You are not allowed to have shares in companies you operate. I'm just thinking, oh my goodness, I lost 100%.
But I can't have your cake and eat it.
Well, I would have loved to have it, and it just. But on a more serious note, I don't think I had a minority opinion here. Where I don't think the only reason why the stock market increased was because of a reaction by investors' expectation of the private sector. I think it was more. If you noticed, it was more after the FX was relaxed, and I think it was more speculation. They expected inflow by foreign portfolio investors to come in. So before they came, they wanted to go and hold positions, expecting capital to come in and to push up the prices. And since that hasn't happened so far, you probably start seeing it starts going back down. So I think that was just I think it's too early for investors to say, oh, the price is still a lot that needs to be done for. So I don't think that reaction was really the market responding to apart from the banking sector, which people expect revenues are going to shoot up as a result of the policy. I don't think that was the major reason. But yes, as you know, companies when they need capital, they have those two options: debt or equity. And as equity becomes the cheaper option, they're going to shift to equity. It's a simple business decision. You will find that higher interest rates. But again, it depends on the nature of the business. It depends on where the proportion of their debt. The proportion of their debt is foreign based, for example. Either way, it will probably be taking more foreign loans as opposed to domestic, because domestic interest rates are higher. Even the foreign interest rates are not, as long as the FX rate is stable enough. So it depends on the business model. But I expect that businesses that have a large component of domestic debt start reconsidering doing a lot more IPOs, because that's, for now, equity seems to be a lot more cheaper, option to raise capital, to expand, and to run their businesses, or just to swap and reduce costs.
Okay, thank you very much. Now, what do you think that we need FPIs? And one of your slides shows that the global FPI is going to reduce this year. Now, and I also know that certain countries may likely benefit from the FPIs, some will lose. In Nigeria, what do you think we need to do, or maybe the government needs to do, to ensure that we attract a fair share of global FPIs? In the last few years, the data from NBS shows that it's been declining, but is there anything that could be done to change that trend?
Well, capital goes to where it is most attracted. If I can get 20% in Ghana, all risk taken into consideration, and I can only get 7% in Nigeria, I'll go to Ghana. So it's the only way you can attract. You said FPI, not FDI.
FDIs.
FDI, okay. Yeah. FDI is more of an issue of first of all, you have to fix, like I said, forward contracts. When FDI is coming, they are coming for 10, 15, 20 years, and they want to be ensured they can repatriate their profits when they want to. I think we have done that already. We have guaranteed the repatriation of dividends and things like that. That's one step that will attract them. The second step is to ensure that the forward market works very well so they can take those decisions. And I think the most important one, which actually was already discussed, is fixing the ease of doing business. At the end of the day, the objective of a foreign development of FDI is to maximize profit, and they'll go to the environment where their profit is going to be maximized. And if, because your cost of operation is very high, because your cost of doing business is very high in Nigeria, you're not going to attract anybody into the country, and that's just the truth. So improve your cost of doing business. He mentioned some of them: infrastructure, both physical and social infrastructure. He mentioned health. He also mentioned education, but I was not even looking at education in terms of foreign investors. I'm talking about one of the challenges that a lot of companies have in Nigeria is attracting good enough talent to be able to operate. So if I'm a foreign business and I want to come to Nigeria, I want to ensure that my cost of operation is low. I want to ensure that I have the demand, which we already have, and I also want to ensure that we have the capacity domestically for running my business. So yes, invest in infrastructure, power, roads, the distribution network, in social infrastructure as well, health and education, the rule of law, to ensure that contracts are going to be honored, the law actually functions properly. Other ease of doing business issues, either all the approvals and documents they have to get, you make it seamless, make things easier to get. I think once you fix that, in an environment where there's potential demand like us, where the people know they can come and produce easily, they can import their raw material, repatriate their profit easily, I think that would draw in foreign direct investment.
Thank you very much. Before I go to the people who are here, I'd like to take this question from one of our online participants. He said, as Nigeria enters a new growth phase, what are the key challenges and opportunities for fintech companies in terms of driving financial inclusion and expanding access to financial services for the underserved? Are there any specific areas you believe fintech and tech ecosystem can make significant impact?
I think the question actually answered itself. It's basically to expand the. I think currently, the penetration is about 50% or just a bit under. I think the advantage of fintech companies is that they are better able to get closer to the unbanked, for example. There are lots of people, and I think the way the world is going, the way that Nigeria is going, you get to a situation where you have to increase the amount of people that have bank accounts, that have access to financial services. And I think that's where the biggest, in my opinion, where the biggest opportunity exists as far as fintech companies are concerned, providing financial services to a lot of Nigerians that don't have access to that currently. And that's not just banking services, insurance services, it cuts across.
Thank you very much. Let me turn on to okay, thank you very much. Question? Let's have the second man.
Thank you very much. My name is Abiola Lawal, Aeroton Energy, DMD. I want to thank you again for a very comprehensive presentation. I want to get your thoughts on where the government should situate security for businesses. I think the previous speaker spoke about that a bit. And you also mentioned during your presentation earlier, for example, that everybody has consumer pressure this time. But there's some of us in the business where consumer is not our pressure. The supply is our pressure. I.e., if I produce enough crude, putting it out in the global market is not my problem. Who's going to buy it? It's my ability to evacuate from Nigeria there. And you also mentioned earlier, if you remember, about the 1.6 million barrels cap. So Nigeria's problem, from my experience, is really not so much about production, but particularly those of us in the swamp and onshore area, is evacuation. So I want you to please talk a bit about the focus on the government to be able to secure our infrastructure to transport hydrocarbon so that we can get the benefit of that. We're one of the few countries that have not been able to really take advantage of that hydrocarbon given these Russia issues. That's number one. And quickly, the second one, I've heard about this $800 million palliative borrow from the World Bank. Can we get it to the poor? Is that really a sustainable strategy even in the short term? I'd like your comment on that. And finally, real quick, I know there's a drive for revenue, tax. We've heard about 1,000 naira to, for example, to register your car. I heard also about VAT for informal sector. It just seems, again, more squeeze on that consumer space. And everything we know about economics says you don't keep taxing when there's so much pressure to begin with. You want to grow the base first before tax multiplies itself. So I like your comment on those three things. Thank you very much.
Regarding the first one, security, there's nothing as far as oil production and supply is concerned. There's actually nothing big about securing the oil production. It's just the willpower. The security is about having the right will to do it. We all know that the reasons why oil theft is so horrible is because there's collusion between even the security. We know that already. That's what's going on. You cannot lose 500-600 million barrels a day. It's not the small guys puncturing holes. I mean, let's stop being ridiculous here. We know, and that's the issue. So it's not been secure because we don't want it to be secured, and people have interest in not securing it. And let's be honest, if we do the math, 600 million barrels per day, that's coming to about $40 million a day. To be honest, you're going to have a fight. If you're asking, if you're asking me to give up $40 million a day in revenue, potential revenue, you're going to have a big problem trying to get them to give that up. They have enough resources to ensure they pay everybody, including security officials. One of the ways, and because we at KPL were advising, I don't think this is confidential, one of the advice we gave them in terms of security of the oil infrastructure was that, first of all, you can actually use sensors to actually put sensors on the pipe. So if there's any breach, an alarm goes up in different sections, and then you can dispatch security to the particular. You can do that. So these things are not. No, it's not. It's just there's no power. I haven't said that because the security guys are entrenched in this whole thing. Maybe you should get a situation where you are changing them every quarter. Bring in brand new people. So before they're able to settle in and start, they have been taken out. Maybe that because when they start, it always happens in every administration. People get scared. The same thing happened with President Buhari when he came in. Even public service servants started going to work on time. There were no sheriffs in town. That initial thing, we know that. And after when they realized, well, the sheriff's in town, but maybe he's not really in town, people went back. No, I'm saying that's a joke, but that's what happened. So that's why I'm cautiously optimistic about this one as well. The initial buzz is always there. It's always sustaining it. So as far as security is concerned, we know how to fix it. Get the security officials. They can nip this. They can catch them very effectively, unless there's that will to ensure that the security officials, they put the sensors and are tracking it regularly and cutting it out. It's going to continue because there's a huge amount of money you're asking people to give up. They're not going to. It's a system. It's not. It's a well-established structure. You have to understand that you can't take so many millions across the entire ocean and the Navy. No, but it's not possible. I mean, we know it cuts across so many different people that are involved in it. So that's the only way it can be fixed. If there's a political will to tackle it and you have a president that's prepared to deal with anybody, I mean, if it tells the head of a security agency, if for every barrel of oil that gets fired and fires them immediately, put somebody else, loses it, fires him again. But if you do that 3 or 4 times, and people are just losing their jobs dramatically, you might eventually get to someone that actually wants to keep his job and take it seriously. But if you are listening to explanation, or is this one, it's continue. And that, I think that's the only way to deal with that.
That's the point I'm making.
Sure.
National issue.
That doesn't matter.
For 2 years, not go and produce. But we produce, we put it in the pipeline, it's taking 100%.
Yeah.
So it's a big problem. And I'm talking about 400,000 barrels in that cluster of NCTL, a 92-kilometer pipeline over a swamp area. So I'm just saying we need to be careful about even worry about OPEC quota when we should focus on what we can control first.
Absolutely. I agree completely. And that's one of the reasons why I flagged even the Dangote refinery that people were expecting price. I don't expect any price reduction, but Dangote refinery functioning and impact on the economy depends on its ability to get crude feedstock from NNPC. So if an NNPC is not able to provide that crude feedstock because of the challenge you are raising, then he has to import it from outside the country. So look, it's very easy theoretically on paper, but in reality, all these little things have to, that's why I said they have to be screwed on properly. Otherwise, it's going to end up in a theory. So you're perfectly right. In terms of I think the last question was, sorry, okay, well, the government has a social registry. I was part of the process of setting that registry. I know it's not properly, it's not very efficient. I don't think that's the best approach to get palliatives. I think most of you find that half of it would get lost. I don't, and that's probably why they are pushing. That might be, there's an incentive to go through that because money will get lost. That's the only good. I mean, that's not the best, most effective way to get palliatives. And the final question was on, yes, I agree with you. I mean, that's straightforward. I agree with you completely. No economy that understands what it's doing. Taxes is country in a recession and when things are going down. In fact, people you think they pull everything down. They want to you're trying to maintain purchasing power so that businesses can continue to work. You don't squeeze and squeeze and squeeze when your economy is going down. You are supposed to squeeze when the economy is actually growing. But in Nigeria, what we have now is government just needs money. And that's the problem with subsidy removal. It wasn't that subsidy removal is actually, there's nothing wrong with subsidy. It's just that most of it was being stolen and we just didn't have any money to pay for it. There's nothing wrong with giving up any kind of subsidy. And the problem with it is like most things we do in Nigeria, we wait until breaking point. The reason why subsidy was removed was because we had there was nothing else to do. If there was still, I'm almost certain that there was still room, it would have continued. But it got to a point where there was just nothing that could be done again. So the same thing with minimum wage. We like to wait rather than do things gradually so that the economy can absorb it. We don't do it for 10 years and then we do it all of a sudden and then it chokes everything. That's our strategy. Simply with subsidy, the minimum wage, we increase the minimum wage by 200% overnight rather than breaking it into source and then all businesses just have to adjust their that's what we do and that's what causes all problems. So you're right. I don't agree with the policy of written about this advice or this is not the time we should try to be squeezing businesses for revenue. I'd advise that rather than squeeze businesses for revenue, increase taxes and so on, I'd rather you focus more on more efficient expenditure of the one you have. Subsidy removal, yes. Go on all the report, all the unnecessary agencies, all the wasteful expenditure. We have a situation with government, revenue generating agencies in government, that as their revenue increases by 50%, they will increase their expenditure by 50%. So that the surplus stays the same. Those kind of things, that's why I think you should tackle first. We don't want to hear about, although it has been debunked, about politicians increasing that's not or having several convoys. And tackle why you give the incentive for business to grow, reduce taxes and so on, and then solve that problem by squeezing your own expenditure. But we're doing the other way around. We're maintaining expenditure and they try to squeeze business. At the end of the day, you might end up getting less revenue because if less people are demanding your product, VAT goes down, consumer what they call tax, company income tax goes down, and all this. So at the end of the day, you're going to end up getting less revenue than you did. So I don't agree with that strategy. I agree with you completely.
Thank you. Thank you very much, Dr. Kale. This is a question. I'm not sure if it's a personal question. Anyway, it's a question. Do you think, given that we're such a critical part in our nation's development, do you think you're more valuable to the country in the private sector than if you were to the country than if you were still in the public sector? Thank you.
I've been in the government for 16 years, although I came to the private sector. I think I paid my dues, and I'll just end that by using one of popular. I'm not available. I'm unavailable. Sorry. I think I tried to serve my country for 16 years. I am not eager to go back to it. It comes. People don't usually understand it because we see the glamour. If I'm going to government to enjoy myself, sure. But if I'm going to work, you actually suffer, and it comes at a huge cost. And it came at, I'm going to go into details, it came at a very, very huge cost to me personally. And in hindsight, sometimes I think if I knew that, I would not have taken it. So yes, we don't hear these parts of the story. We see the glamour and so on, but no, that's for those that are going there to have fun. The way the economy is currently is a lot of work. A lot of work has to be done, and I don't think I want to put myself. It's a lot of. I've had death threats from governors, from. I mean, it's not. Once I finished, I'll just end with saying this. One of my friends said that on my last day in office, they had never seen me smile. That no, I'm actually serious. That they saw a picture when I was taking with my minister. They said the ambassador. I was so relieved to be done, and that's because I know what it's not. When I see people lobbying and fighting for example, I'm just wondering what they know what they are doing. It's a lot of work. If you want to do the work, it's going to be a lot of work. Going to be very painful and stressful. It's going to cost you a lot. And I am not. I think after 16 years, I think I need a break. I think I need a break in the private sector where things are not. I'm not working less, but at least in a more saner environment. Let me put it that way.
Thank you very much. Okay. What that one is going on. The good news is that in your current role, you are still advising the government. So we are still tapping into your rich experience and your knowledge. So continue to do that at a fee anyway.
Dr. Kale, you basically told a story of unfulfilled potential, animal farm with self-inflicted harm. Is there hope in the sense of a lot of advice have been given to the new government through the transition committee. And you've talked about KPMG giving advice, et cetera, Can anything really be done effectively without a whole system reform, especially of the civil service of this country, which is supposed to be the engine of policy implementation? Is there hope, truly?
Without the reform of the public service, no. At best, you have some improvements. That's the best you can hope for, but you will not have that total improvement unless the civil service are incentivized to get things right. Unfortunately, people ask, how did I worked in the civil service, public service, how did I get them to somehow work while I was there? I didn't go and preach national values, and I just changed their incentive. I think that's changed. I redirected the incentive. So you enter a system, all they were interested in is money. They were not interested, mine was data. They were not interested in publishing data. All they were interested in making money. They had to collect their allowances for field work. And they go under the tree, go and write some fake things. Don't even bother. When they even bring the fake data back, they don't even bother to publish it. But that's not you have collected your money, you don't care again after that. And that's what I mean by the incentive was to collect money and just make money, and they didn't care about the rest. So I didn't go and tell them how they should be Nigerians and love their country. I knew I was going to be wasting my time. I just I shifted their focus. So you're still going to get your money, but but you only get money by completing the work. So I double your field allowances, but only give you 30% upfront. The majority of the balance is when the work is completed and the ICT department has validated the quality of the data. Then you get your money. So because they want to get that big balance, they focused on getting the work done as quickly as possible. If I got to a point where they are the ones that come and meet me, oh God, we have no publicity. Where is it good? They were actually pushing, they were coming with new initiatives not because they love Nigeria, or because that's the only way they're going to get their money. So in the process, the system also improved. I'll give on that real story if I end. The director of the procurement that I didn't have a lot of money at MBA because I'm not interested in data yet in Nigeria. And the lifts kept getting destroyed every other week. Yeah. And of course, we bring a file. We need to fix this lift, 3 million naira, 2 million, all sort of ridiculous amounts of money. And I did that for 4 or 5 times. The 5th time, what is good? Every 2 weeks, the lift gets broken. And of course, one brings a file. Of course, in collision, we're going to pull something off. We understand that. So I just said, look, I'm not doing this again. They are banking on the fact that in Nigeria, the CEO is always on the top floor. So if I choose not to fix the lift, then I have to climb 7 floors up. And I did. Well, I was one of the youngest in the office. I was okay. I just stopped going to the gym and I just used that for exercise. So I walked up the stairs and they were basically waiting for, okay, you get tired. So what I did at one point was I just decided I started calling the director. He's on the 2nd floor to the 8th floor, like 6-7 times a day, deliberately. And I didn't have much to say. I'm actually serious. It sounds like a joke. So you come up, I come to see him. He will come up, I'll say something very 30 minutes. Oh, sorry, I forgot to tell you something. I'm actually serious. I called him up repeatedly. And these are very old people. So you see a 50-something-year-old man. At one point, I go very well because he was panting, out of breath. And I was actually worried that he might do. So after a few days, I sat him down. I told you, you think I don't know what is going on? Of course, he denied me. I'm not trying to argue with it. He was earning 500, 400 and something thousand from the whole deal. So I said, you are costing me 2 million naira. So you can collect 400,000 naira that I can't afford. So I did a deal with you. I said, refocus. I said, okay, I will send you on training. You're allowed to get your trade allowance. It will come to about the same amount of money. You will save me 1.6 million naira. When you come back, you must train the staff on what you learned. The lifts start working. Again, it sounds like a joke. I don't think the lift broke down significantly again after that. And if it broke down, he went to fix it. So I created a system where they understood that you don't get money for repairing things. The only way you're going to make money is if you are introducing enhancements to the office. So you're coming up new ways to improve data collection. Yeah, you will probably make some money from the process, but at least it's improving the entire system. So if government understands, that's why I said when people are talking about the president's ability to is very good at that, getting talented people. That's not all that is required. You still need someone that knows that understands the way they think and comes up. It's not by power or by intellect. We have had many intellectual, highly qualified people in government for years, but they didn't establish anything. Not because they were not talented, because the system fought against them. So you need someone that understands the way they operate and has the way to modify the incentives such a way that it benefits the system. Otherwise, we're going to stay exactly the same way we are.
Which you put in place been sustained, or has it been destroyed?
It has definitely hasn't been destroyed. I don't want to sound bad. I don't think it's as effective, but certainly hasn't been destroyed. They are still following the same. It has reduced a bit, but I don't think it hasn't been destroyed. The office is still functional, but I've seen some few issues with policy.
The answer is yes.
I would rather not. I worked for 10 years trying to build the capacity of the MBS. They still have a lot of work to do. I admit that we're not yet world standard. I've noticed some things that are worrying. But I would not state categorically that we cannot trust the data of MBS anymore, especially since it's an office I'm not going to, even if I believe that was the case, I'm definitely not going to state that officially. The current Director General is someone that I groomed in the system. in the 10 years I was there, was a middle level manager, someone that understood the reforms that we built. And I'm just going to keep my fingers crossed and hope that he keeps faith with what we're trying to do. And that's the best I can see as far as that's concerned.
Okay. So let me just take this question from our online participants. Given everything, so Dr. Kale, given everything you have said, can you advise the government on the best form of palliatives that can possibly affect Nigerians, including myself, owing to the subsidy removal and high inflation rate?
I'll break them into very quickly into two, like I said already. I think I already said that in the presentation, two, the short-term palliatives, and they have to be temporal. Whatever palliative or interventions we introduce in the short term has to be exactly that, short term. That's why I don't like salary increases, because salary increases or minimum wage increases are most permanent. You have to keep, and it affects only a very small percentage of the population and can stoke inflation. I prefer palliative that you can remove very quickly. For example, tax reduction. If you reduce taxes for 6 months, you can always increase the taxes when the economy starts to easier. But when you increase someone's salary, you're not going to take it back down. So easier just reduce taxes and paying. So I still have more or less the same amount of money I have to spend in the economy. And then when the economy starts to boom, you can push it up. So I think things like tax breaks, both for businesses as well as personal income tax, is a better palliative in my opinion. And things like I said, electronic transport vouchers. And over the longer term, things like mass transit, improvement in health, education infrastructure, and things of that nature, I think there are better ways to handle this short-term intervention. It has to be temporal. That's the point I'm trying to make. Very short-term in nature. But I don't believe in giving cash and sharing 5,000 naira and things like that. I don't think that's the best way to, the most effective way to go about it.
Okay, thank you very much. Someone actually asked about the tax incentives for the foreign investors, but I think it's been answered. You said, can you speak to the current tax and financial incentives for foreign investors? Do you feel these are adequate? If removed, will these disincentivize investments?
Yeah, are you talking of that? Sounds more like portfolio investors.
Well, I think he said foreign investors.
Okay, well, yes. I think when you are trying when you are, you mean the tax incentives to attract foreign direct investment? They have been there for many years. That hasn't worked. And I feel if you're putting so many incentives that actually look good on paper, but it's not attracting foreign investors, you have to go back to the drawing board and find out why the investors are not coming in. I prefer more of a targeted investment. So you are going to a particular company that you know, whether it's already existing or existing somewhere else in the country that you know is big. For agriculture, for example, you go to a big name in agriculture and tell them, we want you to come and open up investment in Nigeria. What would you need to come and set up your business in Nigeria, or to expand your business if you're already here in Nigeria? And you based on the sectors that you are trying to focus on, you pick 1, 2, or 3 of them, and then say, I'm going to get these 3 guys, whether they're domestic or international, to come in, and you're speaking to them directly, rather than having this general incentive to pull in investors. When you speak to them directly, you know exactly what they want, they need. And I think that's better than we sitting down in Abuja trying to guess what all investors will need, because again, what a particular sector needs is different from what another sector needs. I mean, he mentioned security as his main constraint. Somebody else might mention FX. Somebody might say it is capacity. Another person might say it is distribution. I mean, there are different things, and you have to speak to. So decide the sectors that you are. Most countries in the world is not the little. Is not by you see they have a few big players in their sector, and they are the ones that drive the economy, not trying to bring in everybody in bulk.
Okay, thank you very much. I think our time is fast spent, and I just want to say a very big thank you for your insights that you shared this morning, and I hope that when next we call upon you, you will honor our invitation. Thank you very much. We'll now go into the last segment of the program before the closing remark. And this segment, we are going to be more like a wrap-up from Mr. Wilson Erum Mebo. Is not here, but is going to speak to us online, isn't in place. So he's going to talk about the way forward, unwrapping the insight from the sessions that we've had. Over to you, Wilson.
Thank you very much. Can you hear me?
Yes, we can hear you. Thank you.
Okay, thank you. And I want to say thank you to also the organizers, to FSDH Merchant Bank, for putting this together. I think this is, I've listened so far, very, interesting sessions. And also thanks to, the CEO of NESG that also, asked me to be here. So I've listened a lot. I'd say Dr. Kale's presentation was quite, I don't know, the first session was quite hopeful. Lots of positive things to say, but Dr. Kale's session was quite, making us to see the reality of what's happening in Nigeria. But then I just want to, I prepared a detailed presentation earlier, but I was told there's been some changes to the agenda. So I will just focus on the concluding part of my, presentation. So I'll quickly share my screen and then just talk briefly. I don't know if you can see my screen. Can you see my screen, please?
Yes, we can see it. Thank you.
Okay, thank you. So I'll just, quickly say that, going forward and, taking this to the next level, right? We need to, look towards developing an inclusive growth agenda for Nigeria, something basically that goes beyond just GDP growth to include a lot of all the other key economic agents who I think are quite very important, especially when you listen to Dr. Kale's presentation. It's not just about the growth of businesses alone, right? We must ensure that we're able to carry many of our citizens along as we make policies, because at the end of the day, if we're dealing with an environment with a depressed aggregate demand, that will, in turn affect, our businesses. So I think that's one key area. And I have just one, a slide here that, showed GDP per capita, of several countries and how it's grown over the years. And one of the key things the key message here is that if you look at all these countries, right, this shows the years of constant increases in their GDP per capita. And you would see that, for instance, Malaysia, apart from Nigeria, is even the worst case scenario. You see that there was a 24-year consistent increase in GDP per capita. And within that 24 years, you had just only one decline, and then it picked back. If you move to, Singapore, you had 33 years of increase. If you move to Indonesia, 30 years, China, 54 years of increase in their GDP per capita, with just only 1 year of decline. But coming to Nigeria, we've seen that just 16 years, and this happened from the year 2000 to about 2015, before the recession in 2016. So what that tells us basically is that for us to move from one level to another, we need to pay attention to how we can grow sustainably. And also another point here is when you look at the base from where they started to where they are now, the latest year in the chart is 2022. You would see how far all of these countries are from their base, right? In fact, for China, it's almost like moving from near zero to somewhere around 70,000, in their local currency. So that, but for Nigeria, was still a little bit far, but not so far from where we were in 1960. So I think this is, part of the problem. So we must go back to the drawing board and basically chart that inclusive growth path. And if you look at the manifesto that, like, as Dr. Kale pointed out, of this current president, one of the things that was proposed is more like an average growth of 7% in the next couple of years. So I just played around with some data to see if at all were to achieve this average 7% growth, say for this year at best, we achieve 3% for this year, next year 5%, and then it goes up like that. Where will we even be, as a nation, right? So what you'd find is that we would see a case where, output will double by 2028, which is about 5 years from now, and then we could, achieve somewhere close to 519 trillion naira economy by 2030. However, in dollar terms, that share is a bit lower. So, but what I think is important is how consistent can we be in terms of matching our reforms and political will with, ensuring that we have that consistency. I think that's where we need to be. We need to match our actions with all of our plans and goals and targets. And we must also try to, as much as possible to unlock private capital, focusing on key areas like manufacturing, ICT, infrastructure, power, and growth must be sustainable. And one key thing to bear in mind is that in the next 31 years, our population will double. I mean, some estimates even show that will happen before then. And so even if we're to maintain current unemployment rate, which is, by the way, still very high at 33%, we need to create about 3 to 4 million jobs per annum. Where will that job come from? I think these are questions, and it requires heavy private sector investments, coordination on the part of the government. So the other thing I'll talk about is how we need to align our policies. And one of the esteemed guests, audience, asked that question as to civil service reforms, how important it is. We can't just rely a lot on ad hoc policies. We need, to document. We need to ensure that, appraisals are done, before policies are made. And one key question I have here is who checks or who monitors or who does this appraisal before any policy is made? If the Ministry of Agriculture comes, for instance, to say, I want to do X, Y, Z, have they really thought about how it will affect, manufacturers or people in the energy sector or people in different other sectors? So what I'm thinking about, and because this is a thought session, right? I think we need to have something like a unit within the presidency that would be charged with, taking up the role of trying to see how we can, harmonize policies, and also in the sense of appraisals for any key major policy that will affect the business environment. I think that's something that, we can start looking at, more like an engine room within the presidency that drives all of these, reforms, across sectors. Like what we saw with the Naira redesign, for instance. I mean, after we've done it, we started talking about unintended consequences. Who does a policy like that, in the midst of an election, with even when the goals are not clearly set, and how we implemented it was clearly not the best way to do. So I think, as an example, if we look at inflation, and Dr. Kale rightly, mentioned this, you'd see that we have a central bank that, is focused a lot on the monetary side, trying to, hike lending rates, money supply and all of that to control inflation. But the real question we should be asking is, what are the drivers of inflation? How much of monetary factors contribute to this inflation? There was a study that was done by the IMF just a couple of weeks ago, looking at the European economy. And one of the things they found was that corporate greed, which is down there under other factors, was largely responsible for inflation within the region. This is because even when businesses were not necessarily affected by input or high input energy costs, they will take advantage of whatever is going on to raise prices. And we see that also happening in Nigeria. What can the CBN do about that? So that's why when you read the monetary policy communique, what you find is the CBN appealing, after they've increased rates, appealing to the fiscal side to address all of these other issues that drive inflation. So for me, one key takeaway and the way forward is, why don't we have because clearly this is bigger than the CBN, why don't we have a committee, or whatever we call it, a structure, or maybe a team, because I'm also conscious of cost of governance. Why don't we have something bigger than the CBN that includes both the CBN perhaps the governor, and maybe other ministries that are very crucial, as far as, prices are concerned, that meets every, would I say, quarter, month to see how we can address the problem of inflation, because this is the most singular problem that leads many Nigerians into poverty, that also affects business as it were. So I think that's one key thing I would say. And finally, I think we must also understand the role of markets and allow markets to function efficiently or near efficiently. Reduce all of this interference, that creates distortions across all of the markets. But more importantly, I think we must invest in the capability of government to see how, how they can make policies and also ensure that they even understand what's going on in the market. But at the end of the day, right, we need to also come to the realization that the market alone will not take us to the promised land. Markets by their nature would leave people behind, but we must see how we can, that's where the government needs to step in to address this issue of inequality, that comes with the market. Finally, this is the last slide, and I would say that we talk a lot about, finance, foreign direct investment, foreign inflows, and I think we're missing the issue here. And for me, right, perhaps maybe not missing the issue, I should rephrase. Maybe we should focus a lot more on some of the other issues. And one of that, is manufacturing. For me, this slide is, it shows the problem we have with our economy, and at the same time, it shows where the solution can come in. Where we've seen, and even the solution to some of the foreign exchange problems that we have. Right now we're talking about supply. So I'm referring to both basically outputs, manufacturing output as a share of GDP. You can see how very low it's been, 9%, for last year. And then when you look at exports, what share of manufacturing, goods, account for in our total exports? It's 2%, right? I mean, so I don't know how sad this is but it is depressing to me that we cannot grow, we cannot move from one step or one level of development to another if we continue with this kind of structure. I mean, it will take us nowhere. And one thing about manufacturing is that it sits, as far as productivity is concerned, it's not highly productive, as it were, compared to tradable services, banking, finance, and co. But it's also it has a much higher productivity than agriculture. So on a sectoral level, it sits somewhere in the middle. It's one of the sectors that can absorb many of our labor force that we have in abundance. And it's one sector that can drive productivity growth in our economy. So I think this is what makes manufacturing unique. And in fact, for agriculture, a lot of focus, if you say lots of investment needs to go into agriculture. In fact, for agriculture to be productive, we even need less workers to move into agriculture. So where will the jobs of the future come from? In my view, I think it is manufacturing and also some part of the services sector, which I would have loved to expand on, but I think for the sake of time, I won't. So let me conclude by saying that this is the time for us to prioritize manufacturing. The conditions are a bit, tighter, especially when we look at in the 80s and 90s, when many of those East Asian countries developed their manufacturing. Today, we have, globalization, we have, rapid technological advancement. In fact, at a pace that we've not seen before. And sometimes it's even very difficult to differentiate between manufacturing and services, because lots of tech is being deployed into manufacturing. But I should say that the window of opportunity is still there. It's open, but it may not be open for too long because we have, the rise of China. You see that the global power is moving towards the East, and the East is also moving towards Africa. That is also a concern. And if anything else, I think it should, heighten our urgency, particularly on the part of the government, to provide that much talked about enabling environment that Dr. Kale had mentioned, power, infrastructure, finance, and every other support that we can give to our manufacturing industry. We don't have an industrial policy. Our trade policy has been under the review for almost 10 years now. And we're talking about the AFCFTA. We're talking about Africans coming together. So I know I should end now, but I'd say that this is one area that we should focus on. We have a large market. We have human capital, natural resources, and a resilient people. I mean, this is something that we should be looking towards. And as a friend said, I was on a Twitter space recently, and we're having a conversation, and he mentioned something that, a lot of times we focus on fixing the FX market, but we must have it at the back of our mind that if we fix the economy, that's when the markets will be fixed. So thank you. I think I should.
Thank you very much, Wilson. And that is very apt, because if you don't fix the economy, interest rates, devaluation of the currency, inflation, high interest rates are just symptoms of a structural problem with the economy. So if you don't treat symptoms, you treat the cause. So we need to fix the cause of the economy. Thank you very much. Wilson is a senior economist at Nigerian Economic Summit Group, and is also a PhD student. I wish you the best in your program. So when next we meet, you would have had your PhD, and perhaps you are advising government where you are with your report, with all your resources. Perhaps you want to toward the line of Dr. Kale. Work with them. We need resourceful people, quality people to drive this economy. Thank you very much. I now like to call on Akeem Mohammed, the Divisional Head, Global Market and Prestige Banking, FSDH Merchant Bank, to give the closing remarks.
Okay. Thanks. Thanks, Ayo. And thank you to everyone who has been here today. We know the time is a bit, we're approaching maybe 3 hours, and we understand that, you spent your money with us. So I'd just like to quickly summarize some of the conversations we've had here today. So we started with Deepak, who, as we're told, is the group treasurer at Tolaram. He sort of told us what they are doing at Tolaram what they've done at Tolaram over the years to manage, some of these cyclical issues that we deal with in Nigerian economy, how they've sort of deployed import substitution by backward integrating to ensure that they're able to manage their FX exposures and manage through the crisis that, that we've had. Dr. Kale, I must say, was very frank and open. He told us at the beginning, but during the course of the conversations, he actually said a number of things that I thought, but yeah, I salute your bravery. Yeah. And he told us, again, he reminded us about the story of the unrealized economic potential that Nigeria has, which, I'm sure most of us here, right from maybe secondary school or so, we've been told that Nigeria is this country with great potentials, etc. It broke down in a high level how the Nigerian economy is structured, and the reason why, for example, we get hit by external shocks from time to time, and it's really because 60-something% of our economy is oil based, whether directly or indirectly. Wilson, who just spoke, also told us about why it was necessary for us to sort of develop a sustainable growth model in order to move Nigeria from where it is now to that potential that we're talking about. And he also said how we need to align policies and priorities. So over the years, the monetary and fiscal policies of Nigeria have just been working almost, against one another. And that we need to develop trade and investment policy, industrial policy, social policy. And I think Dr. Kale also mentioned this around civil service reforms. These are critical points, areas that need to be, looked at. And I think maybe for the first time, there's someone advising the president now on policy coordination. So maybe just maybe, we'll get it right. So in conclusion, I'd like to thank everyone present here for coming to spend your time. Particularly, also to mention as well that the online the online audience, because we got a couple of questions from them. So it means they are, they are part of us. This is one of those series that we plan to. I mean, the MD mentioned at the beginning that we're also going to have more sessions, at least one this year, then subsequently, because we think it's important for us to connect with you, our clients, on some of these issues, and not leave you to begin to wonder, because the last 1 month or so of the new administration, we've seen quite a number of things. The president has been very brave with some of the policy pronouncements. Dr. Kale mentioned maybe how, he didn't really, I mean, maybe they didn't properly think through some of those things, because now we need to deal with some of those issues. And I believe that once the cabinet is formed, etc., that there will be people who will then work specifically on some of those issues and ensure that they reduce some of the impacts on the populace. So thank you very much for your time. We're about to close at the event. So thank you, and we look forward to welcoming you again at our subsequent sessions. Thank you.
Please, we'd like to have photographs. Why is Babs? And thank you very much. The online participants, you can now exit the platform. Thank you very much. Photograph. Please, can we please come out and have the photograph here, please? Go photograph all the participants. Thank you.